Hello, this is Joe Pryor, the virtual real estate team in Oklahoma, where we specialize in new residential construction for investors in the Oklahoma City and Tulsa markets. If you're like me, you're looking at the economy all the time, trying to figure out, my gosh, it's been 15 years since we've been in a recession. We're going up, we're going down. Well, basically, there is something that most economists are really talking about, is that the market is going up and down at the same time, and it's called a K-shaped economy. So in other words, if you're one of the wealthy people and you're doing well, your K, you've got that top part of the K. If not, you're the bottom part of the K, and that is income inequality. It is unfortunate, it's gotten to be a bit extreme, but what I've got to talk about today is the fact that I deal with wealthy real estate people. In other words, real estate investors that have a lot of money, and they're buying real estate because they want to protect their money. I mean, we're all looking at that. I'm invested in a lot of different things. I'm invested in stocks. I'm invested in fixed incomes. I'm invested in real estate. When I invest in stocks, I'm looking for solid dividend companies. I'm not a, get rich quick kind of guy. I want something I'm going to hold for a long time, be it Apple or something of that nature, where I know I'm pretty safe in my investments. Same way with real estate. Real estate is going up. It's going up on a regular basis since COVID hit us. And it keeps going up. In fact, the median price is getting towards $500,000 in the United States. So if you're one of those folks, that's who I deal with. You're going to be looking at the way that you have safe havens to protect your money. One of those ways is real estate investing, because everybody's got to live somewhere. You're either going to be a homeowner or you're going to be a renter. And we always know that about 62 to 64% of the United States are homeowners, depending on the markets that you're in. That means a good third of the market are renters. And so that is your target that you're looking for with your real estate investments. And that's what we specialize in. That is all that we do. So, with the kind of properties that we have with new construction starting at about $214,000 and going up, what that means is it's with 25% down and using money for a mortgage buy down. In other words, getting a lower rate, you're going to be out anywhere per home, let's say $60,000 to $90,000. All right, so you've got a lot of discretionary income. But this is where things are going. If you've looked at the stock market right now, it's a wavy gravy. It is going up and down. Sometimes it trades on rumors, sometimes it trades on statements from the federal government. But what you're looking for is something that you feel secure in. So I'm not saying that everything that you do is going to be a real estate investment, but if you are in the upper part, if you're in that K economy going up, you're going to have real estate in your portfolio. That is the way the 1% get rich. That's the way they get the tax deductions, which are tremendous in real estate that you can't get anywhere else. So if you're in that upper part of the K, real estate is what's going to make good sense to you. And an affordable market like Oklahoma City and Tulsa are also going to make sense for you because we have positive cash flow. You're not subsidizing your investment. You're making money every month and you're having appreciation that's growing over a 5, 10, 15, 20-year period. So that's where we are right now economically. This is what the upper part of the K-shaped economy is doing. This is what we specialize in the Oklahoma City and Tulsa market. Give us an email. We'll set up a Zoom meeting with you, talk about strategy, talk about market economics. Hopefully I'll be able to talk to you soon.